Welcome to Short View Trading. It's your morning market hit for Monday, 18th of July. What are the things to look at in these markets if you want to trade them on a 1 to 2 week basis? Here we're going to talk about swing trading, 1 to 2 week trading of equity index futures, principally the S&P 500, but also others including the Nasdaq, the Russell, the FTSE and the DAX, and all the factors you want to take into account when you're thinking about that. And by the way, if you like these videos, please do click on the subscribe button and share them on social media. It's all free content. So the jury is out. As of Thursday last week, it all looked pretty troubling. The S&P broke below a key support level, 3750, as you can see on the chart in front of you now, and moved very briefly down to 3723, the intraday low on Thursday, before then rallying. JP Morgan's earnings had thrown the market. They were disappointing, and they were part of the reason it sold off. Added to which sentiment from CPI on Wednesday was still not helping in market terms. But at that time, that pullback in the S&P 500, we'd seen key risk barometers of the equity market doing better. If you look, for example, at this chart of the Philly stocks, you'll see that it closed up on Wednesday, Thursday and Friday last week. And on some of those days was one of the strongest parts of the equity market. And it's a key risk barometer. It often gives you insights into where the S&P might go. Added to that, if you look at Bitcoin made its intraday low last week on Wednesday, as you can see on the chart in front of you now. So a day before the S&P 500. And once again, this is often a key risk barometer, gives you insights into where the S&P might go. And on top of that, the Nasdaq 100 have been outperforming for a while. So all of those reasons are part of the reason we moved long intraday Thursday. We put in an order to buy at low levels around that key 3750 support level. So we were filled on that order and since then have been enjoying some upside in this S&P equity market. So we strengthened those asset prices on Thursday afternoon and into Friday's trading session and overnight in Asia as well, into early morning London time. So as those markets have rallied from that intraday low on Thursday, the S&P in particular, we've seen some real strength. And what's happened is a number of these indices are now back at the top of their multi-week range. If you look at the S&P 500, for example, 3,900 is a bit of a level over the past couple of weeks, as you'll see in this chart in front of you now. Added to that, if you look at Bitcoin, it's a similar sort of picture, range bound so far in recent weeks, while if you look at the Philly stocks, it's back and close to testing its 50-day moving average, which over recent months has been a bit of a resistance level for it and a level that it's struggled to meaningfully move through. So with that, the key questions become, are these indices going to break out to the upside or are they just range bound, in which case you should be selling them around about these levels now that they've had a couple of days strength? And one of our key ways of thinking about that question and one of our key insights into it is to look at our models. We update these each and every trading session, publish them every morning when we publish the Daily Rag, and subscribers to the Daily Rag get all those daily updates of the models as well as how we feel about markets and what our recommendation is on S&P equity index futures or other index futures at certain times. One of those models is the ETF fund flow model. This aggregates fund flows, hot money if you like, in and out of ETFs that are direct plays on the S&P 500. And as you can see from this model, it's correlated reasonably well with the swings in the equity markets on a 1 to 2 week basis in recent months. And it's back on buy. So from that perspective, that's encouraging. So all these models are updated daily for subscribers with a Daily Rag available through the website. If you're interested in a free trial of the Daily Rag, please do click on the link below. We'd be happy to send you the Daily Rag for free for a bunch of trading sessions. All we need is your name and email address. No credit card details required. So what are we watching today and this week? Well, there's a lot going on, a lot of macro data releases. Of course, we've got ongoing earnings releases from the US. Q2 earnings season continues. We had a lot of banks last week, got a couple more banks this week, and then we start getting into other sectors of the S&P equity market. So that'll be key, that'll be watched closely. That's always important. And sentiment about earnings coming into the season has been quite depressed. So there's every chance that the upside surprises will continue and will continue to underpin upside in equity markets. Elsewhere though, we've got the ECB. This is a big meeting later this week with a press conference following it. What are they going to be doing? The expectation, of course, is they're going to raise rates, but anything on the ability to control those Italian bond spreads, that will be important, the anti-fragmentation tool. Over and above that, we've got a housing theme from US data over the course of this week. Lots of bits and pieces of housing data, starting with NAHB Home Builders Index today, some starts and permits and so on later in the week. And then we've got some UK inflation data. And then we end the week with the flash estimates of the PMIs from across many of the major economies. So that's it from us. That's your morning market hit for Monday, 18th of July. Thank you for listening. Please do subscribe to these videos on YouTube or follow us on LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe, trade well.